Good morning, everybody. Welcome back to the Schwab YouTube coaching channel for Trader Talk in today's market. I'm your host, Kevin Horner, joining you from a beautiful, sunny Denver, Colorado. Today, as always, on a Wednesday, pleased to be joined by my friend and fellow Schwab coach, Brent Morris. Good morning, Brent. How you doing today?
Hey, I'm doing great, Kevin. Happy to be on, happy to look at the markets with you, and happy to see a whole bunch of some new faces out there in the crowd. Don't get me wrong, we're glad for all the people who've been here before, but a special welcome to those who are new today too.
Absolutely, Brent. We love our usual suspects, but we always appreciate kicking it up a notch. Getting some new attendees is always nice. Remember, everybody, we host live here for Trader Talk 4 days a week in the morning. Tuesdays, the lone day, we do not host Trader Talk. We'll replace that with a futures conversation with Ben Watson, but we are here to evaluate the market, see what's moving, and try to offer up some demystification of what might be going on. A little difficult to do this week in particular, but we're going to strive to do just that with all of you. If this is your first time here, you should know that we coaches are available on X. You can follow us there. I'm there at Kevin Horner CS. Brent's available as Brent Moores CS. And today we're joined in the chat by Scott Thompson, and you can find him on chat and X, as well, at Scott Thompson CS. Make sure that you are subscribed to the Schwab YouTube coaching channel we call Trader Talks. And if our discussion today does anything for you, hey, give us a thumbs up down below. We're going to archive this class. We get this into the archive for all of our viewers who can check this out after the fact. And that thumbs up down below helps us out quite a bit in the YouTube algorithm. So with all of that laying the foundation, let's get to our disclosure so that we can get to charts. So first, please remember that everything we discuss today is considered informational and educational only. We do not make recommendations. We do not endorse any specific approach to trading the market. We do, however, discuss technical analysis in this class. We're going to review the broad indices here and incorporate technical analysis concepts and strategies as we offer that evaluation. Remember, though, technical analysis is just one piece of your decision-making puzzle. It is not intended in any way to be the entirety of your decision making. So make sure you're incorporating a multitude of factors when you're basing your buys and your sells. Now, we generally don't cover options in this class, but it may come up as we review some other areas of the market, notably as we discuss things like the volatility index. But just know that options carry a higher level of risk and are not appropriate for all investors. And you do need to be familiar with the options disclosure statement prior to any investment. And of course, you need to be previously approved in order to trade options. So make sure you go through the requisite steps. Last note. Here's our agenda. We take a top-down approach in this class, everybody. What that means is we start with the indices first. So we're going to look at the S&P 500, the Russell 2000, the NASDAQ 100. We'll probably expand off of those, semiconductors, software today, maybe the transports as well, before moving into sectors and stocks in the news. So that's level setting us for the day. Let's jump to the chart of the S&P 500. And Brent, I think a lot of us would state that yesterday's price action that was perhaps most notable was the fact that we opened weekly and finished in the green for the day with a really nice long candle at the lows of the day.
Yeah, I was watching it yesterday, and it was just kind of climbing. It just kind of gradually recovered throughout the day, but look at that candle. This is yesterday's candle. So that big long tail down there at the bottom of the day, that's a good sign. I mean, if you're bullish, you don't like seeing the big drop during the day, but the fact that we close near the top of the day is a positive sign of reversal. Now, also pay attention to where that is and where it moved in relationship to our support line. That's that white dashed line there. That's a line that we've used, an area that we've had as kind of a channel of support for a few months now. And each time we've come down there, it has bounced. We've gotten some support from that. Well, midday, early yesterday, I should say, we looked like we may be breaking through that. But very often for technical traders, we care more about where it ends up than where it starts. And that intraday's test and the fact that we closed above that actually just adds to more confirmation that that support level is a valid support level at this point here. So channel is still in place, and inactive. And this morning we're up a little bit out of the gate, so to speak.
Yeah, Brent, I agree with you about the enormous tail we got, which tells us quite a bit. And I think that's the key takeaway on a daily chart like this is that that tail tells us that bulls were there as we sold down to a new short-term low. They stepped in. And as you stated, Brent, it's exactly why traders will tend to lean towards or put more importance on closing valuations in terms of validating support or resistance. So the other thing that I wanted to look at as it relates to the SPX was the hourly chart here, because yesterday I noted on X that we basically finished the day in the gap zone from Monday night into Tuesday. So we had this huge gap and we got about halfway into the gap with yesterday's action. Now, sure, initially this morning we start hot and now we're just breathing a little here off the open. But ultimately, there's a lot of belief out there that we could perhaps rally into the bottom of that gap, maybe around 68.70 potentially, before we start to see maybe an extended breath over the short-term period of time here, Brent.
Yeah, absolutely. And of course, everything we talk about today in terms of technical analysis is kind of dependent on what's happening in the world. And yes, there's a lot happening in the world right now, Kevin. And so that can change things. And of course, the big thing obviously is the war and oil and access to oil and that. But using technical analysis, we can kind of look at these levels and look for levels of potential turnaround and look at trends and things like that. In this case, it's a clear view, and we can look at, I think this is a good reminder to look at different time frames. You can look at this hourly time frame, look at these hourly candles, and you can switch out, use a time frame that's going to be most beneficial to you to help you. Kind of in general, you'll notice that we probably use the daily candles more than anything, but I think it's important to be able to look at these intraday candles too.
I think so too. It's really a reminder that we can pinpoint our entry and our exit strategies a little bit if we incorporate those shorter term time frames. The more time we spend evaluating that daily look, I think sometimes it can get a little bit easier if we apply the same level of just black and white analysis as opposed to emotional analysis. If we can avoid adding emotions to our view and our analysis, we're probably better suited. But it helps to look at various periods, I think. So it's notable, Brent, that we're just going to call it out right now since we're talking the S&P, and the VIX is going to tell us about the S&P specifically. These are, of course, the volatility measure of the S&P put options. And Brent, it's been a little bit elevated, but we've seemed to have a pretty clear level at 28 from which we've been pushed back. So the interesting thing to me is that we've seen this elevation in the VIX kind of hold. Yes, spikes to that 28 level have been pushed back and maybe broad market or maybe SPX buying opportunities perhaps, but the elevation of the VIX in the last 2 months or month and a half to 2 months has been kind of notable, hasn't it?
Yes. So we've seen just recently the spike and the VIX, for those of you who aren't aware, this VIX is, some people will call it kind of like a fear gauge or an uncertainty index. It technically just measures the price, how expensive options are. And the more uncertain people are about the markets, the more expensive options are. And of course, obviously, there's a lot of uncertainty when a war breaks out, or or there's other news events that can certainly drive it up. The tariff news or something can drive it up, or other things. But we can see the spike there on this. And I forgot your question there, Kevin, regarding the VIX. Go ahead.
I think the big takeaway for us as traders watching the market daily, right? Yeah. Spikes are one thing, but the VIX has been elevated above that very comfy 13, 14, where we'd seen it really hang out when the market was rallying. We're not in that current environment right now.
Correct. And I guess what I was going to say is for a lot of people, this war didn't come out of the blue. people saw, hey, tensions are rising, or there's other things that drive that VIX up. And
Hmm.
so if this came completely out of the blue, and if everything else was just wonderful and there was just a normal kind of level of uncertainty in the world, before we probably would have seen the VIX in the kind of the low teens there before it
Sure.
spiked up. But it kind of and anticipates, in other words, um, the market action kind of knew there was some concerns, and that's why the stock market, the index, it was heading down before all this broke out. They go inverse. The VIX
Yes.
typically, the VIX and the S&P 500 are more often than not going to go inverse to one another. When one goes up, the others goes down.
Hmm. So we can take a little knowledge from the VIX. The elevated volatility does speak to the uncertainty relative to geopolitical risks. But Brent, even without the geopolitical risks, it is the second year of a new term of presidency. We've got midterm elections coming in November. Commonly, that's a period of chop for the market as well,
Yes.
rather than to trending window of time. And the best example of that is just overall history, speaking to what we've really gone through of late. Brent, I'm bringing up the NDX here now. What we've noticed most recently here, I think, is just really consolidation in the NASDAQ 100. We have gone sideways really dating back to the early fall of last year, late summer, really, August, September, and we're closing in on the 200-day moving average. What's the thought process now? We've been below the 50-day moving average really for the entirety of February and dating back into January. So does the 200-day just call out to us on the NDX here?
It calls out to me because that's the next level. I mean, you can always look for different. What's going to define a support level? Perhaps
Mhm.
a horizontal line, a horizontal area that we've bounced off in the past. Well, you have that on the chart. You have the next kind of major moving average we'd be looking at is that 200. And for a lot of traders, that 200-day moving average is kind of a key moving average.
Mhm.
And it doesn't mean that the market's going to necessarily bounce off it, but it's kind of a key level that some traders will take action upon when it's more significant for them when it breaks that. In this case, there's kind of a almost confluence, not exactly. The moving average is a little bit above your support level, but this is kind of an area, if you will. And keep in mind, anytime we talk about support levels, generally we're referring more towards areas than
Mhm.
exact prices. And because look, you may draw support level one level, I may draw it like slightly differently than you. And so and other people will draw it slightly different than that. That's kind of the area right now of support. We've seen the NASDAQ 100, which is what we're looking at here, kind of, it hasn't been as strong as the rest of the market right now. Well, you can see that evidently if you look at those mega cap type names,
Mhm.
um, and their performance hasn't been as strong. Think of Alphabet or Microsoft or others, Amazon. They
Yeah.
haven't been as strong, and so this is reflecting that. But before long, we'd expect, for a technical trader at least, some sort of bounce if we keep going down a little bit. May happen, may not. Again, news dependent.
It exactly. A couple of things that jump out to me. Number one, this market is not necessarily conducive to technical analysis when we have so many headlines that we have to pay attention to. But what we can do is still assign values and levels of support below existing levels of support. Meaning, if we were, for example, to break under the 200-day moving average, that would be a significant development in the NDX. And where could we possibly fall if we did? We obviously, I mean, there's an excellent horizontal level of support way back at the prior highs from 2024, which we tested again in early 25. And then once we got through them, Brent, we started that lovely uptrend. That tells us this level is very important. Doesn't mean we have to fall to that level, but our risk to fall to that level increases pretty dramatically if we start to close under the white line up here that I've just drawn from. And just make note of the distance there, everybody. If we have a greater likelihood of testing this longer range horizontal support, that could be as much as an 8+% downside move. That's something that traders need to be aware of. It doesn't mean we got to get there. It just means that our likelihood of getting there is increased. The odds of that are greater. And so traders under the 200-day, or maybe making a new short-term low, may need to be taking steps to put them into a comfortable position thereafter. That's just one of the processes that traders have to go through, Brent. I'm sure that stands out for your management process as well.
Yeah, absolutely. You, as a trader, you need to have clear steps. And I know I sound like a broken record on this, Kevin. You need to take the emotion out of the game, so to speak, because if you're driven by greed and fear, it's going to lead to inconsistency in your trading. It's going to lead to emotional trades. And it's like most things in life, emotions don't usually help when you're trying to remain calm and make clear decisions. If you're in a heated situation, an argument or something, that's not usually the best mindset when you're trying to think rationally about how to interact with somebody. And
Great point.
same thing with the markets in your trading here.
Especially since the market does not have those emotions. The market could not care less about us. The market doesn't know when you bought that position, doesn't know when you sold it. The market is always correct. Our job is to work within the parameters of how the market works, so that we don't put ourselves in uncomfortable positions, right? We trade to make money, but we also trade to manage capital, our balance of available funds. So it's all part of this substantial process.
Yes. And
Brent,
Kevin, let me just mention one more thing. Patrick in the chat said, taking emotion out is hard to do. Yeah, believe me, I agree with that. It absolutely is. That's one reason why when you're making these decisions, you make them ahead of time what you're going to do. Oh, I'm going to lighten up on this position, or I'll add to this position, or I'll shift my allocation. I'll add, I'll move my stop up, or whatever it is. Make that decision ahead of time before the event happens. That isn't, it doesn't take all emotion out, but it can help you to make more objective decisions there.
That's the idea. Yeah. And we're never going to eliminate emotion entirely, probably, but we should work to reduce it at least. There's another comment in the chat that I really enjoyed, and it's from Hill O'Keefe commenting that they've been gone, brief vacation, completely unplugged, which I could not support more. I'm a big believer in taking your time away from the market. And when you do, step away from the market. It can do a lot for you mentally. If you're finding yourself a little overwhelmed, you may have already done things like go to position your trading portfolio, go to more cash. It makes it easier for you to deal day to day, I know. But I know as well that when I'm away, I try not to pay too much attention to the market, because I'm otherwise paying attention every single day. Stepping away, taking a fresh look and a fresh perspective when you come back can be quite helpful, as it turns out. Brent, the movement in the Russell has been a bit more of the same, really, in terms of volatility, but it seems like it's held up better. I wanted to quickly talk about the movement we've seen here before we get into some industry groups. But the 50-day moving average, as I zoom in, seems to be a pretty important level on the Russell here.
Yeah, just to remind everybody, the orange line is that 20-day moving average. The purple line is the 50-day, and the blue is the 200. So that is kind of a key level because we've bounced off it in the past. As you look at these different moving averages, look back in kind of late December, you'll see we bounced off the purple line. Look to the beginning of February, end of January maybe. We bounced right off that purple line. And yesterday, we actually were a little bit below that line. We're kind of in the ballpark, so to speak, of that line. And so I would say the jury's kind of out. Usually when we talk about these support levels, or when we talk about moving averages, we're not looking exactly. And so that kind of leads itself to when people are making trades, they'll say, well, I needed to stay below or above this level for 3 days or something like that. It's not an
Right.
exact recommendation, but the point is, uh, give it a little time and look for a definitive break. Right now, we are a little bit below that moving average. We'll see how we end the day. I don't know. We're roughly flat on the day right now. But to your broader point here on the Russell 2000, which is small cap stocks, they have been stronger. Compare this chart to that NASDAQ chart we looked at. How the NASDAQ was kind of just languishing. This has actually been a pretty strong chart. It's pulled back a little bit, no doubt. It'd be a little strange if it hadn't pulled back somewhat, but that's a relatively strong pattern. That green line there,
Nope.
you see
I'll go
that
back
green
to the
line?
daily. Sorry.
That works on the shorter term too. That green line is a key line, though, I think. I mean, you mentioned the moving average, yes, but that's kind of the support level right now. And that would be a more significant break, just like the other indexes. We tested it intraday yesterday, but by the time we closed, we're above it. And so I think a lot of traders would be kind of just keeping an eye on that, seeing if we stay above that or below that. And as long as we're above that, I think the relatively bullish narrative overall on the Russell 2000 holds up. That narrative may break down a little bit as we break down, if we break down below the green line.
It's true. And obviously, the Russell has some substantial ties to interest rates. And as interest rates move around, we obviously have some risk there. Interest yields, for example, are up a little bit today. But really, the key level, I think, is that 20-day moving average in orange. You'll notice that we got down to under 4 here very recently in the last week. And I think that that's giving us some of the same view that maybe yields are going to go lower without intervention. One of the key components that we've noted, Brent, as it relates to the yield conversation has been that the CME Fed tool, how traders are positioning, that's a third-party page, by the way. They've basically been kicking the can down the road, right?
Yes.
Been looking for rate cuts, a couple of rate cuts this year, but rates may automatically, or I should say organically, go to the downside, and it may not require intervention otherwise.
Yeah, just a reminder, when we talk about the Fed watch, the rate watch tool there, the CME rate watch tool, that's talking about the Fed funds rate. That's a very short-term interest rate. This right here is the 10-year yield. Well, there is some general correlation between the two. In other words, in general, when rates are going down, they go down across the spectrum to a certain extent. There's not necessarily a one-to-one correlation. And sometimes, we've seen this a couple times in the last couple of years, where the Fed will cut the short-term rate and the long-term yield actually goes up when that happens. But in general, there's a lot of factors that go into the 10-year yield. And what I'd say right now, of late, from a technical standpoint at least, between about the 4 and the 4.2 level. So on this chart, it'd be between 40 and 42. We just moved the decimal point over for the actual rate. That's kind of the area it's been in. And right now, we're kind of on maybe the lower side of that, even though we've gone up the last few days somewhat. That's a better, if you want rates lower, that's where we want it to stay. And so we'll have to see, but different things can drive that. And not to mention, everybody's thinking about war, that, appropriate, but there's economic activity, economic reports that can certainly affect this. And so keep an eye on continued, looking at economic activity, labor reports, inflation reports. They all impact this as well.
Yes, they do. Brent, we're going to expand our discussion a little bit. We talked about the NASDAQ's struggle. We know that the NASDAQ is heavy on tech, notably the big two industry groups, semiconductors and software. Let's start with semis, which pulled back in the midst of this uncertainty, found the 50-day moving average. This actually looks like a place where maybe bulls would look to expose some new money here, potentially. In the sense that the trend along the 50-day in purple exclusively, if I eliminate the 20 and the 200, you'll see instances below it have been your opportunities to join in. We're trying to figure it out right now in the semis. Now, the RSI is kind of creeping down into a lower level, but this is an area where traders might look, and if not, then maybe some horizontal support down here at the last highs could offer support for us in the near run if we break down. Anything to add as it relates to semis, Brent?
I would just say this is it leads to a broader discussion, which we're not going to get into too much here, but let me just mention this. With technical analysis, and in general, this is true for all parts of technical analysis, but with trends, what it's done in the past is kind of what the expectation is of what we're looking for it to happen in the future. Now, sometimes it doesn't happen that way. Sometimes it completely reverses. Otherwise a trend, once it goes up, would forever go up. That doesn't happen. But the point is, in the past, when we've gotten near that 50-day, we've seen some strength and we've bounced up. So that's why some traders may go, hey, we're near the 50-day. Now I'm expecting it to go up. Maybe that happens, maybe it doesn't. Maybe all good things come to an end, is the expression. Well, hey, there's that's the measure there that we're looking at, and that's why we're looking at that 50-day moving average there. So I wanted to make that broader point on technical analysis. Same thing with support levels or resistance levels. The expectation is they're going to hold because that's what it's done in the past. It's come down to a certain level or gone up to a certain level in the past,
right,
and it's held. Eventually it'll break, but right now that's the approach that people are doing. And this is an interesting chart. This is semiconductors. Take a look at software, and what a different story software has been here, both in the same sector, completely 180 degrees from one another.
So this one's interesting, Brent. We've had a lot of negativity. We might be in the midst of what some traders would call, if nothing more, maybe just a relief bounce in software. Here's something that's notable. We had lower price action, so lower low in price, higher low in RSI. We had a bullish divergence with the RSI. And then yesterday we closed above the 20-day for the first time basically on any real substantial bounce, really since back to December here. And then the December window was pretty limited in scope, right? We made a matching high or rallied into resistance. We made a lower high above the 20-day here. So what we're looking to do is establish the 20 as support now, and we'll see if that holds, but it's led to some moves in some of the bigger software names that started to move lower first. Now, I'm bringing these up only because of their relationship in software and the size of them. So please know, even though these are individual equities, we're not obviously recommending these, but I wanted to point out, when we're thinking software, think about Amazon, think about Microsoft, etc. Here's a nice move from Amazon in the sense that it's out of this consolidation all of a sudden, above the 20-day, above potential former support, now possible resistance. But there's also moves in companies that have been absolutely beaten down, like Microsoft getting back above the 20, and another one, Adobe, back up above the 20. Adobe's been as our friend Barb likes to say, Brent, on the struggle bus for quite a while here in Adobe. So I think it's notable because, Brent, when we start talking about the components, the breakdown of the broader market, utilizing the Market Watch tab, the quotes page, looking at our year-to-date returns, man, we have been going sideways collectively, unable to get through that 7,000 level in the SPX. But Brent, it's because we're not getting participation from our technology group as a sector. It's our biggest component in the broad markets. And if it's not offering or participating in a rally, it's going to be really hard for our major indices to move higher.
It is the IT sector is not only 60% of the NASDAQ, and we've seen the NASDAQ, but it's a third of the S&P 500. And so, and some of those big companies we just talked about, and in particular, actually, IT probably wouldn't be doing that bad if it weren't for the software portion of it, because some of the biggest companies in software are in IT are software. At some point, what often happens, and there's a couple narratives, is at some point, what happens is they get so beaten up, they're kind of on sale at that point. It becomes priced in, and therefore there's going to be a turnaround at some point. I don't know, there's some glimmer of hope right now. We saw that on the charts, but it's, who knows? I think the jury's still out on that one a little bit. But you're right. This is a good chart you have. And everybody, you can do this on your own Thinkorswim desktop software if you want, is just pull up, it's called S&P 500 sector indices.
Yep.
That's the public watch list. Going on public, you'll see two. They look pretty similar, sectors and industries and sector industries. The top one, sector indices, gives you those. And then just make sure you add in a description column right next to that, because otherwise you're left with the symbol, which you're probably not going to know those. So that's why that description column's there. But you can see which have been the top performers over different time frames. Well, today, actually, IT is doing great. Consumer discretionary is doing great today, because you Kevin just clicked on that and you can sort by the header. Makes it easy. But if you look back over the past month, not so much. Very different story.
Yeah, it's real interesting, Brent. I love comparing the changed year to date versus the day change.
Yes.
So our worst performers year to date are our leaders at this point of the morning thus far.
Yeah, exactly opposite. What's red is green and green is red, right there.
Yeah. Yep. But that's not necessarily a negative, is it? That could be groups that are beaten down, turning the corner and seeing an influx of money that had left those groups previously. That could be a boon for those groups. It's possible we could be looking at more than just a bounce.
Absolutely. And I would submit it is healthy, Kevin, because what you don't want is an economy. Not speaking just from a stock market standpoint, speaking from an economy standpoint, you don't want an economy that stinks other than one sector. We want other areas of the economy to be doing well. And for a while, IT was just, and maybe communications, was kind of carrying, just threw the rest of the economy on its back, so to speak, and just carried it along, so to speak. But right now, we've seen some strength here in these other sectors. And it hasn't had the impact that IT would have, because it's not as big. The biggest companies, but it's probably a good thing.
So I want to answer a question here from Adventure Golfer just about the relative strength. These are available as well. All of my columns are native to the Thinkorswim desktop application. So you click the gear in the right corner, select customize, and all we're looking for, so my change columns are percent change since, double click, and then you get it loaded here. And then you'll notice a little arrow that allows you to define the window of time. That's why I've got them loaded 4 different times, 4 different time frames there. Now my relative strength, those are also in there, RS, and you can start to search for what's available. These should be native to your platform as well. And you can also request any partner of yours, any friend who's got access to these, who's already got them built in. We can share these. These actually look like these are scripted, so I might have to share these. So I'll share these. I'll put these as scripts into our show notes at the conclusion of our discussion. So if you come back and look at the archived version, everybody, or if you're watching this in the archive, just open up the show notes and you should see these relative strength numbers available. I'll go ahead and make sure we get those added. I wanted to speak, Brent, briefly. We talked about the size of those groups. We know leadership year to date, real estate, materials, utilities, energy, staples. Look at just how small that group is. That 5, those are our leaders relative to how struggling we've seen, from how the struggle has been real in tech, discretionary, financials. Look at the size of those components relative to our leaders. That's why we're not seeing the S&P break out, everybody. That's what a key is a key understanding of the component breakdown of this S&P 500. And it's when you look at it like that, you can clearly see why we haven't broken out, because we've been in major pullbacks for a lot of these big companies, Brent.
Yeah, no doubt. And it becomes even more extreme when you look at, let's say, the NASDAQ or something like that. Click on the NASDAQ 100 there. Look at this. Look how big the block of IT is, and on the NASDAQ, and communications and discretionary and all these like little itty bitty things. And there's really no financial representation there on the NASDAQ. But you can see how that's why it matters what sector you're looking at, and what index you're looking at for that. What index you're looking at, because of the different sector representations in each of those.
Yeah.
And that's why, you can look at the S&P 500, and the S&P 500 equal weight will look very different, or the NASDAQ will look very different. So anyway, there you go. And this is what we're seeing today is just kind of bucking the trend of what's happened for most of the year. And today we're seeing a lot of green on IT, a lot of green and just, discretionary and whatnot.
Yeah, there's the chart on technology zoomed in. You'll see that we're at the 200-day moving average. Maybe we found some support with the lows we created just yesterday. They happen to coincide with the last lows. So again, I'll remind you, matching lows as a trend, matching lows are cool. It's the lower lows we don't like. And the fact that the intraday level was held and provided a bounce, that at least gives traders a level under which they would change their tune as it relates to the tech space. Let's also take a look quickly at communications, which is also in a bit of a broken trend here in the shorter term, Brent. The long range, if I were to draw this in, you can see that there's been a bit of an uptrend, and then when we broke it most recently, we bounced right into it, the confluence of the 50 and the 20 in here, and we've basically been in a little bit of a downtrend. We need to see if we can get this back up above that 50-day for communications to get back into gear. And then we can also see that financials also struggling a little bit here. So, we've got some levels where we know things would shift a little bit. Brent, is there anything you'd like to add as it relates to those big three or any of the other sectors? I want to make sure we hit up some stocks in the news today.
Yeah, I guess the only thing I would say is, energy obviously is one that's going to be impacted with geopolitical events here. And you can see there was already a big spike there. But part of that was, hey, we've known there's been tensions with Iran for a while before there was any talk of war or actual concrete action on that. We knew there was things were heating up a little bit there, and so we've seen that, and that may explain why. Hey, it's not hasn't gone up as much as maybe some people would think. And obviously, oil is one component of energy. It's not the only component of energy. And so, you just have to be aware of that there.
Well, since I put oil on energy up there, noting the 20-day moving average, let's just quickly look at oil. I'll point out that we're looking at the future price of oil. That's the futures contract. Just know that futures option trading, of course, this involves substantial risk, not suitable for all of us as investors or traders. Make sure you're familiar with the risk disclosure statement for both futures and options here at Schwab. The move obviously tied to the conflict looks like we've held a level of short-term support, ballpark to around $70 a barrel. Under that level, though, this would be pretty favorable for the broader market if we could get it back under 70, but obviously that remains to be seen. Very headline driven market here. While we're also talking futures, quickly I wanted to look at gold and silver. Since I've just covered the futures disclosure, we could at least point out that we found gold, that is, found the 20-day moving average just yesterday with a pretty good candle. But again, Brent, we've been using the 20 or back and forth around the 20. This is a pretty important level now, isn't it? I mean, falling to the 20, holding the 20 on the close, and then testing it again intraday today. This is also coincident with horizontal support in gold.
Yeah, from a short-term level, that's kind of an interesting level that we'd be looking at. But keep in mind, even if we break below it just a little bit, we've seen that over the past few weeks, and it's a one-day close below it probably doesn't necessarily signal a change. But if we remain below it for multiple days, that would be a really kind of negative sign for that. We'll have to see, but also keep in mind when we talk about gold, just how much it's come up over the past couple of years. You guys have seen that. And a similar thing on silver, except just a little bit more volatile on silver.
Yeah, it really has been more volatile. It's also been a little less clear as to whether it's got a foothold here, doesn't it? It's just been the volatility has probably made traders a little bit more crazy. The reminder, I think, is key here, though. Gold is a precious metal, pretty much the extent of its availability, right? But silver has commercial components to it, right? There's plenty of companies that require silver just to do their business, and it is a part of the AI discussion as well.
Yeah, absolutely. So, we'll see. But if you were to measure, and I don't think we have time right now to do that, but if you were to measure just the run up and the magnitude of the drop down there on silver, it's phenomenal how much this has gone up and then subsequently dropped on that. And silver and gold as well are traditionally kind of, I don't know, some people have the reputation of more boring type assets, maybe.
Yeah.
Because maybe perceive lackluster returns, or just kind of safe haven moniker is attached to. Well, that maybe that narrative's changing a little bit here. Maybe it speaks to the part of diversifying a portfolio, and some traders elect to have a position in precious metals in their portfolio for that reason.
Some would, for sure. Brent, we're going to bring us to some discussion on stocks in the news in our final minutes here. Target got upgraded at Bernstein to market perform from underperform. Put a new target, big adjustment here, by the way, up from 91 all the way to 116. Tells the advisory also upgraded target to outperform from market perform. Their target up to 145 from 110. The notable move in target, I think, Brent, is the level we just took out. This is now a 2-year chart, but notice we got through the ledge of resistance around 107, 108. And we've really been running with approximately the 50-day moving average, moving to new highs here with today's upgrade.
Yeah, big turnaround in Target. On Monday in this webcast, we looked at Target versus Walmart, just how strong Walmart has been over the past couple of years versus Target. Just tale of two completely different stocks here. But Target, it seems to be turning it around after getting beat up for a long time.
Trying to, for sure. The other one that got upgraded this morning is a little known company called Tesla. I think some of you might be maybe heard of this one. Upgraded at Bank of America, reinstated, as it turns out, actually, Tesla with a buy, up from a prior neutral rating, new target at 460. Bank of America views Tesla as the current leader in consumer autonomy, expecting it to quickly become a leader in robotaxi services. 200-day moving average found yesterday and on Monday, Brent. At least, if nothing else, bulls will tell you they've got a support level under which they change their tune.
Interesting. Yes. And look at where the bounce is in relationship to, you got it right there. Look at that. That's like perfect. That's where the bounce is. Now, it's not all rosy on this chart because we've been in a downtrend for a while. You can see that on the the 20-day moving average there. And so we kind of have this descending triangle type pattern here. We'll see which way it breaks out, breaks above the upper white line or the lower white line. That a lot of traders will take that as the indication of if it breaks through the upper, more of a bullish move. Today's move is great, but it doesn't break a trend yet.
Not yet. That 20-day will be notable. If I lifted my line and we just looked exclusively at the 20-day by clicking my little box there, you'll see we were above it for a day, back below. Above it intraday, 2 days in a row, back below. Above it here for half a day, back below. That tells you that's rejection at the 20-day, everybody. So the 20-day has been resistant. After we get above it, maybe it becomes support. All right, everyone, we are unfortunately at time. I'm going to wrap it up with a few key notes for those of you who maybe are new to our discussion. A couple of things. The first is make sure that you subscribe to our channel, but also be aware of our calendar. Schwab.com/coaching takes you to our upcoming webcast calendar. This is a great way to know what's coming. We consistently offer you the same classes at the same times, Monday through Friday on a week-to-week basis. Many of you who will utilize the archive will find your archived conversations right here. Brent hosted for me on Monday. You'll notice when I click it, you get access to the YouTube link. If you'd also like to learn more about us coaches, you can do that via the Meet the Coaches link. We are all coaches, been here for a long time, but you learn a little bit about us. Maybe you'll find the coach with whom you connect most clearly. We encourage and invite that as well. Don't forget, you also have access to in-person events. We are out and about hosting technical analysis and option strategies workshops, both advanced and traditional, along with market drive events. We just completed one in San Diego last weekend. There's a lot to take from Charles Schwab Education, and we invite and encourage you all to do just that, all of which, of course, is complimentary. So today, big thanks to Scott Thompson in the chat. Thank you for being here, everybody. Hit that thumbs up button for us down below. We would appreciate that. And make sure you're following us on X, Brent Moores, CS, Kevin Horner, CS, and Scott Thompson, CS. When we coaches aren't hosting for you, the best place to meet us is on X. So with that, thanks, Brent. Appreciate you being here, buddy. Great discussion today. And to all of you, have a fantastic Wednesday. We look forward to catching up with you all again real soon.